Why 99.9% of you will lose money trading Forex. Stay tuned, traders. We'll talk about that next. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Sunday, got a big storm coming to Perth this afternoon, huge storm. Today we're going to be talking about why 99.9% of traders, maybe yourself included, may lose money trading Forex, and why I developed the 12 candle rule. FOMO, fear of missing out, over trading, over leveraging, not using stops, not having a plan or a process that could be duplicated, not really having an edge in the market, not having the discipline to follow any system consistently that had an edge, and all the things that we all are programmed and designed and flawed with that make us really ineffective for trading any market successfully. And we're going to talk about this in a second. One of the biggest things, the reason why I do the daily videos, is it helps me stay on track and stay focused, but also I've spent thousands of dollars and hours and years studying and trading and making every mistake that a trader can make, and over that time really went nowhere. You know, you get some winning trades, you make some money, you think you've figured it out, only to go back in that same repeatable cycle to making the same mistakes or trying to trade every move in the market, wondering why it doesn't work. One day you have a great trade and you think you figured it out, the next day you end up blowing double what you made the day before. These are all the things that, again, if you have to peel back the onion to figure out where your mistakes are, and again with the 12 candle window, a lot of my learnings, piecing different things together from people and books that I've learned over the years, and then finally just fine-tuning that down into a really basic strategy based on how the market moves. I'm not selling you a course, I give everything away. I explain everything right down to a 12 candle window, and the purpose of that is then the next challenge for you as an individual trader is to be able to trade that in live time. And not only trade it live, even just small, but then developing that skill set and being able to bump up size and be remaining emotionally orientated on executing your process and not the outcome of each individual trade, which you can only do through over time through consistency and producing those results and duplicating them. But when you do that, you realize that you can scale that up and you lose any interest in trading anything else. You're not attracted to moves in the market because you have a duplicatable, reproducible system. So I think that's really something I want to hammer home. I've been trying to explain that. I've had some interactions with people. It's about you developing the skill. Everybody who's here wants to make money trading. It's you that has to develop that skill set. You have to be able to do that in live time, and you can only do that through developing that duplicatable routine, that duplicatable strategy, and knowing when your edge presents in that small window of time, in that moment of time, being able to execute, place your stop, place your profit target, and be comfortable with what the market does after that. Knowing that you did what you were supposed to do. You did the right thing. Let's just talk about this. People who come to trading, if you're serious, it's a business. You're focused on the business side of things. You want to make money, you run it like a business. You understand that it is us against them. If you're not making money, you're losing money. And that's either then becomes a hobby, or you figure out what you're doing wrong and you quit doing that and you start doing things that are right. People come to the market and they take a course, they buy a book, they read something in the paper that somebody's made a lot of money, and they figure, well, I'm smart, I'm successful, I'm well educated, I've read a bunch of books, I took some courses, so they're ready to go to trading. And the market doesn't care. Doesn't care what course you took, doesn't care what school you went to, doesn't care how successful you've been in other professions, doesn't care how smart you think you are, because The market knows you only think you are well educated and that you think you have an edge. And the market is going to let you occasionally from time to time believe that. And it will lull you into a false sense that the more you learn or the harder that you work, the better you'll get at trading. And that is completely false. You can work hard at trading and take as many courses as you want and still not show any results. But I'm disciplined and I've back tested my system and I'm ready. I will say this for a discretionary trader, back testing is virtually impractical because you're making decisions each and every day in a live performance setting that are all dependent on you as an individual, on your skill set, your routines, how well you're going to perform on that given day based on the market circumstances. And I will say this, if you're interested in doing algorithmic trading, I would recommend getting Kevin Davies' book about algorithmic trading, because Kevin has a fantastic book written about this. I don't know Kevin personally, but I've read his book and I've interacted with him. I think he's probably the #1 person in the profession if you're interested in algorithmic trading. For me individually, I don't want to trade that way. I'm a discretionary trader. I'm comfortable with making the decisions in live time and doing it mechanically myself. Mike Bellafiore talks about this. Most traders don't really have an edge, and all the different systems and indicators and all these different things in Forex, it's very challenging because the market is manipulated. We know that when the market's open, they move them, they run stops. It's all about clearing, hitting stops, trapping traders and hitting stops. That is very difficult for an indicator-based system to catch all those whipsaws without trapping traders higher up and getting stopped out, or down low and getting stopped out. But really understanding if you have an edge or not in live time is the next step. Again, being able to execute that edge in the heat of the moment when the market's flashing price or moving quickly, or there's momentum happening, or the spreads or the numbers are changing quickly and rapidly, and the market's doing things to scare you out of a winning position. You get into the market and then all of a sudden it consolidates and keeps hitting your fill price for the next 30 to 45 minutes before finally shifting, but you got out because you thought you were going to get stopped out, so you got out before the market hit your stop, and then you watch it run away without you. All the little things that the market's going to keep teasing you with and get you to keep coming back for more with the belief that you can do this. But if you don't really have an edge, in live time, then you're still going to repeat a lot of the same mistakes. Understanding risk reward. I understand risk reward. I thought I understood risk reward until I heard Peter Brandt hammer it into my head enough times about asymmetrical risk reward. That's where the geometry comes in, knowing that you can have a 1-bar stop and a 4 or 5 or 10 to 1 profit target. It's one thing to say I want to shoot for 6 times my risk, but it's another thing understanding in a live application based on where you're trading from and to how that risk reward setup really works and how it works in live time. I'll do everything right live. These are all the things that we all think when we come to trading. We think we're going to do everything exactly as, so we've back tested our system, but that's again on the belief that the same things are going to keep happening in the future based on what's happened in the past, and also based on the belief that you're going to execute the system perfectly in the heat of the moment, which again, we are the variable, the market is the constant. And so again, why I filtered everything out down to the 12 candle window, because it was the highest probability time frame, and understanding when stops get hit that they move and shift the market, and in a large majority of cases around the open of the market. Again, it allowed me to start peeling away all the things that I was doing wrong and narrow my focus down to 1 or 2 specific moments within that 3-hour window of making a decision, placing a stop and a profit target in place, and then allowing that trade to go to its fruition. making mistakes, learning from each trade, getting better and better and better in live time, and then slowly working on getting size up. And that's an individual goal, whatever you're trying to achieve. But again, really understanding if you have an edge, and then understanding the risk reward. It's one thing saying I want to take 3 times what I'm risking, but if you don't have an actual method or model that's going to produce that based on how the market trades, then that's just, I hope it gives me 3 times my risk on a trade. And hope isn't a good strategy. And again, not doing everything right. I'm patient, I'm disciplined. Again, in live time, the market will impulse and do things to trap you into thinking you're going to miss out on the trade. Again, the 12 candle window is largely based on timing, not on the action of the candles whipping around. It's based on how the clock rotates and seeing where the stop hunts occurred, and knowing that in that hourly rotation, if they shift the market, when it's going to happen, and recognizing that through the behavior of the price itself. Disciplined. The discipline is being able to sit and wait for that 12 candle window, knowing that there's going to be a movement, and if it doesn't happen, not taking the trade, because there's plenty of those trades happening every day and every week that if you miss one, or you don't take one, or it doesn't look right, that you know you're going to get one in the next session or in the next day, and so you're comfortable. It takes no energy to wait. I'm going to get rich. That's possible. It is very, very possible. And I read something from a gentleman on his trading notes. He said you only need to get rich once, and that is the truth. And when you understand that, you're patient enough to wait and develop the skills, and develop the real skills, and being brutally honest with yourself, and knowing whether or not you're actually following your system or not, and whether or not the system and the results that you're getting was based on the scalable model, so that you can keep bumping up size. And then when you realize that, and you're trading large enough and duplicating that strategy, you do only need to get rich once. You don't need to chase big moves in the market. You don't need to do anything, because every day they offer you great opportunities where the market moves, and if you're trading large enough, those moves can be substantial in terms of profit and loss. I'm going to work really, really hard at this. The market doesn't care. Market doesn't care how hard you work. You only think you're going to work harder and get better results. You can work as hard as you want. The market doesn't care. And it doesn't mean you're going to get better results with your trading. We're going to get to that part. I'll be consistent. Again, emotions. We all think we're not going to, get angry, want to get revenge, fear of missing out, hope, fear, greed, pain. All these things are tactics in the price action that are designed to stir these emotions up in us and make irrational, impulsive decisions about getting in the market. And I don't care what the stats say, it's 99.9% of traders lose money. The 0.1% of traders that are making big money have figured out they have one little edge or 2 little edges, and that's all they focus on. And they scale size, and they're patient to wait. Wait. They're not worried about missing out. They're not worried about getting stopped out. They don't care, because they know when the moment comes, when their setup is there, they've hit it enough times and they've bumped up size slowly over time, that they know that they can get stopped out and they're going to make it back ×3 on the next trade. And everybody gets emotional. Again, the 12 candle window, all the little things, it's all about peeling away the things that I was doing wrong, and most traders continue to repeat and do wrong, that interferes and sabotages with them getting real results in live time. The bottom line. So if you can start looking at all the things that you routinely do that end up sabotaging your results, and then figure out ways, create solutions to eliminating those variables, so that, like literally in the 12 candle window, if that first hour in most cases is a trap or nothing, that means you have 8 candles to either do nothing, buy, or sell. And if you're wrong, you could do 3 trades. You can be the first mouse and get stopped out. You can chase the second move and get stopped out, and then you can get in on the right direction and it can go. You could make three wrong trades. But if you've done this enough, you know you're only looking for 1 trade based on how the structure's presented, your preparation for the session. Anybody who's been trading long enough knows that you can make $1 million trading and you can lose $2 million a week later. It doesn't matter what you've already done. It doesn't matter how consistent or successful your results are. Every day when you go back to the screen, you have the potential to blow yourself up. And that is why 99.9% of traders will end up losing money. You have to have built-in mechanisms constantly in every direction to prevent you from, number 1, sabotaging your trading, but number 2, sabotaging what you've built up in your trading. So be taking money out, putting it in, and paying yourself, investing a lot of that money, protecting the returns that you've gotten from your trading. We are programmed to self-sabotage based on what the market throws at us. And trust me, we have a belief that next time it will be different. I'll never do that again. How many times have you been in a trade where you've done all the wrong things? You've averaged into a losing trade. The loss gets bigger and bigger and bigger. You're holding on. You average in a gain. You're holding on to finally you get to the uncle point, and you keep saying to yourself, "Just get me out of this trade. At break even. I'll never do this again." Everybody who's been trading has done all the wrong things trading. And again, the 12 candle window was about trying to eliminate out as many possibilities of sabotaging that trade execution as possible, so that consistency could come into the picture, duplicating that strategy, but also understanding that in Forex, they are going to go and hunt stops repetitively back and forth, and there's an opportunity to piggyback on the smart money. I'm ready to trade bigger. Even though my results haven't shown me that, I'm going to bump size up because this is the perfect trade setup. And what does the market say? Perfect. Thank you for coming out. And that's the trade that could blow you up. You get in early, you don't have a stop, you put a whole bunch of size on it, then you find out you're actually counter trending in a measured move, and the market continues to move for the next few hours, few days, blows your account out, and you cry yourself to sleep. So then the ultimate realization is that trading's impossible, it can't be done, and anybody who says it can is lying. Now again, trading can be done, but I keep harping on this. It's about what you can do in live time. Now if you're an end of day trader, that's completely different. The downside of end of day trading, unless you have a massive account, is that you can never really trade size end of day. You can slowly grow that over time, and certainly there's nothing wrong with that. But if you're interested in trying to achieve significant growth in terms of income, then I believe that day trading offers you the best risk reward when you know what you're doing and you really have an edge. But that is a skill that can come at a significant cost in developing or learning, which again is partly why I keep harping on the 12 candle window, because most of the other things that are out there will end up over time having inconsistent results. People will lose money. They'll spend thousands on worthless junk that you can get from a free internet course or book at the library. Again, we are destined to chase trades, over leverage, not use stop, get angry, fear of missing out, hold on too long to a trade, not get out when we should, when we're losing, hold on for more money in a trade and get nothing out of it. And then the pain factor. You could be in a winning trade. I've talked about this. I was in a 700 pip profit trade and I held on to it and got stopped out at break even. The round the world trade. Some trades you can be in a very successful trade, hold on to it and come back and get stopped out for a loss, and not having learned to take a profit, not learning to cut a trade, not using a tight stop not knowing where the real stop should be placed, averaging into losing trades, being hopeful when we should be fearful, being fearful when we should be holding on to a trade. Little things that, again, really understanding if you have an edge in the market, because the professionals, okay, they're constant. Thanks for coming out. See you again soon. Thanks for giving us your money. Trading is a business. If it's a hobby, then you're probably better off just to, you know, go to the library, get some books, do some reading, buy, hold on to it for a while. But if you're trading Forex, I'm gonna really harp on this. All these things are gonna cost you money. You're gonna blow your account up, and the professionals are gonna say, thanks, next, because it's us against them. And if you can piggyback on their trades, you have a chance. Then the next step is managing yourself, making sure that you're not doing anything stupid that's going to sabotage your results. The 12 candle window, I can duplicate that every single day, high and low of the day. The timings, time of day is critical. It's all timing. Round numbers, 90% of the trades will come off of numbers at highs and lows. Then having a risk reward, you know, at least 2-3 times your risk, but also understanding when the market is going to do things in live time to scare you out of a winning trade, and learning how to manage that process. And I've talked about just placing the trade and walking away and getting 50 pips without being at the screen, rather than being at the screen and getting out of a trade too early, then watching it go away, or getting into a trade and then trailing it and getting stopped out because I trailed the market, knowing that they would come back and stop hunt trailing stop losses, and then watching it hit the 50 pip target. All the little things, again, timings are critical. So the reason why 99.9% of traders are going to lose money is because they really don't have an edge. They're emotional. They don't understand how the market works, and they treat it like a hobby and not a business. And it is serious. If you're serious and you want to get to size, then you'll understand that there's not a lot of room for fooling around. It's business time. The market's about making money. Somebody's going to make it, somebody's going to lose it. So hopefully you got value out of today's video, traders. Study hard. Treat it like a business. Keep getting better. Don't be impatient. Just be focused and be ready to scale your trades up as your results support that. The markets are going to be there tomorrow, next week, the week after. Don't blow yourself up, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.